All right, welcome to The Explainer. Today, we're diving headfirst into the world of a live online day trading stream. It's a place with incredibly fast-paced decisions, some really high stakes, and let's be honest, a language that can feel almost impossible to understand.
So you drop in, and immediately you hear something like this. What in the world is R2? And what do they mean, it's done?
And then you hear this, which sounds kind of crazy, right? A gamble trade? Isn't that the exact opposite of what you'd expect to hear on a financial stream? And just when you think it can't get any weirder, you get this. An algorithm that just spits out a couple of numbers? Yeah, it feels confusing, chaotic, and honestly, a little bit out there.
Okay, so let's actually dive in and make sense of all this. We're going to deconstruct this stream piece by piece. We'll go from the jargon to the strategy and really figure out what is actually happening here. First things first, before we can even get to their strategy, we need to get the lay of the land. You know, what are these traders even looking at all day?
The answer is pretty much everything, all at once. On their screens, you've got the big US stock indices, like the NASDAQ, that's NSDC, and the S&P 500, which is ES. But they're also tracking the super volatile worlds of Bitcoin and Ethereum, commodities like gold and natural gas, and even currencies like the euro. It's like a global snapshot of all the markets, happening in real time.
Okay, so now we know what they're watching. The next step is figuring out what on earth they're saying. To break down what they're doing, we first have to learn to speak their language. The whole stream is just jam-packed with shorthand and jargon that's absolutely key to understanding their logic.
And this brings us right back to that first quote we heard. R2 is done. So the R stands for resistance, and you'll also hear S for support. These are probably the most common terms you'll hear. The easiest way to think about them is as predicted floors and ceilings for an asset's price, all calculated by their system. So when the host says R2 is done, what he really means is the price just hit that predicted ceiling and now he expects it to fall. This is the absolute core of their technical analysis.
So you're probably thinking, okay, this is all about cold, hard data, right? Charts and analysis? Well, not exactly. See, the traders on this stream use two completely different methods for making decisions. One is based on all that technical stuff, and the other one is based on, well, something else entirely.
You can really see the two sides of their trading brain at work here. It's fascinating. On one hand, you've got the SuperAreas system. That's their proprietary software that calculates those support and resistance levels, you know, the floors and ceilings. But on the other hand, they use something called the 85-40 method, which they openly call a gamble trade based on pure psychology.
And this quote from the stream really says it all. The 85-40 method isn't based on market fundamentals at all. It's literally an attempt to find patterns in the superstitions and psychological biases of other traders. They're trying to find their favorite numbers and then trade on them. So how does this gamble actually work in practice? This is where it gets really wild. Their algorithm analyzed years of data, and it found that for some strange psychological reason, a ton of traders place orders on NASDAQ futures when the price ends in either 85 or 40. So their system just joins the party. It automatically places an order at those numbers to grab a tiny, quick profit, a move that's known as a scalp. It's this incredible blend of data science and human superstition. Okay, so we're starting to get the lingo and the strategy. But that brings up a really big question. Why are these streaming all of this for free? What's the business behind the broadcast? Well, that brings us to the world of the funded trader.
The business model they promote is something called the Funded Trader Program. Think of it like this. You pay a small fee to rent a professional race car for a qualifying lap. If you can prove you can drive it well, hit your targets without crashing, the company lets you drive their car in the big leagues, and you get to keep a huge chunk of the prize money. You're risking a small fee for access to a massive amount of someone else's capital.
And there's a whole marketplace of these programs. A company like Take Profit might offer you a $50,000 account for just a $90 evaluation fee, but you have to pass 2 stages. Then you've got others, like Per Capital, that'll let you skip the line with instant funding, but it comes at a much higher cost. It's a whole fascinating marketplace of risk and reward.
And this is the appeal. This is the entire point right here.
It's the incredible asymmetry of the deal. You are risking this tiny little sliver of your own money, that $90 fee, for example, for the chance to trade with a massive pile of the company's capital. It's a high-leverage bet on your own skill. So, let's bring it all together. We've decoded the language, we've unpacked the strange mix of strategy and superstition, and we've revealed the business model. So what does this world actually look like when you see it as a whole?
What we're looking at is a complete ecosystem. It blends this rigorous, chart-based technical analysis with these really bizarre psychological gambles. And it's all wrapped up in a clever business model that sells access to high-risk, high-reward financial products. It's a fascinating intersection of data, human behavior, and commerce.
You know, this last quote from the stream just captures it perfectly. In a world we think of as being run by cold, hard numbers, these traders are actively building strategies to profit from the most illogical parts of human nature. It leaves you with a final question. In the modern market, where does the algorithm end and the super